The U.S. dollar is a little change to kickstart the day. I'm looking at the major currency pairs, and the biggest mover is the Canadian dollar with a gain, dollar versus Canada with a gain of 0.18%, versus the euro, the yen, and the pound sterling. The biggest mover is the pound sterling with a gain of 0.15%, so a lower U.S. dollar. Go through the technicals of those three currency pairs in this video, so let's get started. Yields are a little lower with the 10-year yield down about 1 basis point. It's just a little, so of course. But taking a look at the euro versus U.S. dollar here, what we've seen on the 4-hour chart in trading yesterday was a move back below the 50% retracement of the move up from the May low to the high price that we saw in the month of September. That 50% came to 1.14919, and you can see that the price has tried to move back above that 50% level, but has been pushed away. We're currently just a few pips below it. What I can also say is that the momentum to the downside has been thwarted. The trading range today is only from 1.1477 to 1.1497, only 20 pips. So that's not a lot. I would expect that the market moves outside of that trading range today, not going out on a limb there. So that's going to take the price either for back above the 50% with a little bit more momentum with this area up through here as the next key target up near 1.1518, 1.15295. So that's something to aspire toward on the upside if we break that way. If we break to the downside, then we'll look toward this swing area between 1.1447, 1.1458, and look to get below that. If we get below that, then we start to look toward the rising 200-day moving average, just moving toward that 61.8% retracement. That's the roadmap in that direction. By the way, if we do move above this swing area through here, then we start to look toward this double bottom. This actually the bottom right through here, which had two double bottoms right here, and then a sharp, smaller or a higher high right there, but right around the 115.45 level would be another key target. This week we've stayed below that area on the push to the downside, so be aware of that. But that's the roadmap. The 50% retracement, 20 basis point, 20 pip trading range suggests that we're gonna move somewhere today. I don't know which way it's going to go, what's going to push it, but the sellers are trying to keep a lid on the pair, so they still have the control, but it's only a few pips away from that losing that control, so be aware of that. Dollar versus yen, we moved lower in the Asian session. That moved to the downside, got the price back below the 200-hour moving average. It's a green line in the chart. Note here that the price fell below the level and then reestablished support against the level here and here before moving to the upside. We broke below that level, could not sustain it. We didn't retest it, we just moved to the upside. But what we did on the fail break below that 200-hour moving average is that we moved back between the 100 and the 200-hour moving average, and that's more of a neutral stance after a break. Yes, we're higher. We tried to move below this swing area as well, couldn't do it. So the buyers are trying to take back more control. But we also fell below the 100-hour moving average. Kind of did the same thing right here, fail break above it, and then rotate to the downside. So, the market's going to decide, what do we want to get above the 153.92 level? Keep that momentum going. If you're more bullish, if you bought this break back above this level, you're sitting pretty for that idea. If you want to continue the dollar going higher theme, alternatively, if you think that the dollar has reached its peak with this 1, 2, 3 highs up here, then this is the area to lean against to push the price down. But we do need to get below that 200-hour moving average and stay below that level to open the door for further selling pressure. Finally, let's take a look at the sterling versus U.S. dollar, focused on the 4-hour chart. And in trading last week, we came down to 38.2 and then fell below it toward the end of the week. In this week's trading, we did try to move back on the 38.2 earlier in the week. And then yesterday was a big move to the downside away from it. So the sellers took more control. Now, we did come down to this swing area right here. Just sort of a random low and also near this swing area here, where we had a number of different swing highs, sans this area right through here, and then traded above and below it here. So it's okay. I mean, these levels are okay. just because there's nothing here. But and we held support against the higher of those levels for the most part. But if the price is going to continue this trend to the downside, we need to push toward the 50% retracement level. That 50% retracement comes in at 1.29433. Get below that level, opens the door for further selling pressure. And that's what the sellers would be looking for as well on this move lower, to get back below that level and stay below that level. If we're able to do that, that opens the door for further selling pressure. If we can't get down to that level, then obviously the 38.2% retracement in this swing area right through here. By the way, it's also a nice floor there at that 38.2, becomes a key resistance on the top side. That's going to be make or break for the sellers going forward. You got to stay below that level. So there you have it. A look at 3 of the major currency pairs. You can start your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.